Have you ever wondered why you work harder and harder each year, but somehow never feel like you're getting ahead? You're grinding 40, 50, maybe 60 hours a week, watching your bank account like a hawk, cutting back on everything from your morning coffee to your weekend plans, yet at the end of the month, you're still asking yourself where all your money went. Meanwhile, somewhere out there, people you've never met are getting richer off the very financial decisions you think are helping you save money. My name is Nick, and I've spent years studying how money really flows in our economy, and what I've discovered will probably make you question everything you thought you knew about building wealth. The uncomfortable truth is that most of your everyday financial choices aren't just failing to make you rich. They're actively making other people wealthy while keeping you trapped in a cycle that feels impossible to escape. Today, I'm going to expose the hidden system that's been quietly transferring your potential wealth to others for years, probably without you even realizing it. We're going to break down exactly how this wealth transfer happens, who's profiting from your financial habits, and most importantly, how to recognize when you're being played so you can start keeping more of your own money. But first, let me ask you something that might sting a little. When was the last time you made a financial decision that actually improved your long-term wealth rather than just solving an immediate problem? Think about it for a moment. Most of us are so busy putting out financial fires that we never step back to see the bigger picture of where our money is really going. The system I'm talking about isn't some conspiracy theory or secret society meeting in dark rooms. It's hiding in plain sight, built into the very fabric of how we're taught to think about money. From the moment you get your first paycheck to the day you retire, there are countless ways that well-meaning financial decisions end up enriching others while keeping you stuck in place. Let's start with something that affects virtually everyone watching this video: your relationship with debt. Now, I know what you're thinking. Obviously, debt makes other people rich through interest payments, but it goes much deeper than that. The entire way we're conditioned to think about debt creates a wealth transfer system that most people never fully grasp. Take your credit cards, for example. You probably think of them as a convenient way to make purchases and maybe earn some rewards points. But here's what's really happening. Like, every time you swipe that card, even if you paid off in full every month, you're participating in a system where merchants pay fees to credit card companies. Those fees get passed along to consumers through higher prices on everything you buy. So even if you never pay a penny in interest, you're still paying for other people's credit card rewards through inflated prices, but it gets worse. The credit card companies have mastered the art of behavioral psychology. They know exactly how to design their products to encourage spending while making you feel like you're being responsible. Those cashback rewards that seem so generous, they're funded by people who carry balances and pay interest. The more you use your card, the more data they collect about your spending habits, which they then sell to other companies who use that information to market more products to you. This creates what I call the consumption amplification loop. Your spending data gets sold to companies who then target you with more sophisticated advertising, leading to more purchases, generating more fees and data, which funds more advertising, and the cycle continues. Meanwhile, your potential wealth gets redirected into corporate profits every step of the way. Now, let's talk about something that might surprise you: your savings account. Yes, that safe, boring savings account that financial experts always tell you to have. While you're earning maybe 0.5% interest annually, banks are using your deposits to make loans at 5, 10, or 20 times that rate. They're literally using your money to generate wealth for their shareholders while paying you almost nothing for the privilege. But here's the part that really shows how the system works against you. Yeah, inflation is running higher than your savings account interest rate, which means you're actually losing purchasing power every year. Your money is worth less tomorrow than it is today, but you feel good because you're being responsible by keeping it in savings. Meanwhile, the bank is profiting from the spread between what they pay you and what they earn from your deposits. The financial services industry has convinced millions of people that this arrangement is not only normal but smart. They've created an entire mythology around emergency funds and safe investments that keeps your money working for them instead of for you. And because most people don't understand how inflation works or what real returns look like, they never question why their diligent saving never seems to translate into meaningful wealth. Let's move on to something even more insidious: your monthly subscriptions. These might seem like small, harmless expenses, but they represent one of the most effective wealth transfer mechanisms ever created. The subscription economy has exploded over the past decade because companies realized something brilliant. It's much easier to extract money from people in regular, small amounts than to ask for large, one-time payments. Think about all the subscriptions in your life right now: Netflix, Spotify, gym membership, phone plan, internet service, maybe some software subscriptions for work. Individually, none of these seem like a big deal, but add them up, and you're probably looking at hundreds of dollars per month going towards services that you could potentially live without or find cheaper alternatives for. It's like, here's the psychological trick that makes this so effective. Each subscription feels affordable because it's just $10 or $20 or $50 per month. But companies aren't thinking in terms of monthly revenue. They're thinking in terms of lifetime customer value. That $20 per month subscription represents potentially thousands of dollars over several years, and they're banking on you forgetting about it, getting comfortable with it, or simply finding it too much hassle to cancel. The subscription model is designed to create what economists call switching costs. The more subscriptions you have, the more complicated your financial life becomes, and the less likely you are to regularly audit and optimize your expenses. Meanwhile, these companies are generating predictable, recurring revenue streams that allow them to plan long-term growth strategies funded by your monthly payments. But subscriptions represent something even more problematic. They train you to think of expenses as fixed costs rather than choices. When you have 15 different monthly subscriptions, you start to see that money as already spent before you even earn it. This mental accounting error prevents you from viewing those funds as potential investment capital that could be working to build your wealth instead of someone else's. The truly frustrating part is how these systems work together to reinforce each other. Your credit card makes it easier to sign up for subscriptions without feeling the immediate pain of payment. Your low-yield savings account means you're not earning enough return to offset the opportunity cost of subscription spending. And the behavioral data from both your credit card usage and subscription patterns gets packaged and sold to create even more sophisticated systems designed to separate you from your money. This isn't happening by accident. These systems have been carefully designed and refined over decades to maximize the extraction of wealth from regular consumers while making the process feel normal, convenient, even beneficial. The companies profiting from these arrangements employ teams of behavioral psychologists, data scientists, and marketing experts whose entire job is to figure out how to get more of your money without triggering your natural resistance to spending. What makes this particularly cruel is that many of these wealth transfer mechanisms are disguised as financial responsibility or smart consumer choices. You're told that building credit history is important, so you get credit cards. You're told that having an emergency fund is crucial, so you put money in low-yield savings accounts. You're told that convenience and efficiency matter, so you sign up for subscription services. Each of these decisions seems reasonable in isolation, but when you step back and look at the bigger picture, you start to realize that you're not making independent financial choices. You're following a carefully orchestrated playbook that's been written by people who profit when you make exactly the decisions they want you to make. And here's where it gets really interesting. The people who design these systems don't use them themselves. Although wealthy individuals don't keep large amounts of money in savings accounts earning 0.5% interest. They don't carry credit card balances or get excited about cashback rewards. They don't have 17 different subscription services automatically debiting their accounts every month. They understand something that most people never learn, which is that every dollar you're not investing in your own wealth building is a dollar that's available to build someone else's wealth. Let's talk about something that might make you uncomfortable: your car. For most people, transportation represents their second largest expense after housing, and it's also one of the most effective wealth transfer mechanisms in the modern economy. The average American now has a car payment of over $700 per month, and they're keeping these loans for longer periods than ever before. But here's what's really happening when you finance a vehicle. You're not just paying for transportation, you're funding the profits of car manufacturers, dealerships, financing companies, insurance companies, and a whole ecosystem of businesses that exist to extract maximum value from your need to get from point A to point B. That $700 monthly payment represents potential investment capital that could be growing your wealth instead of funding their business operations. The car industry has mastered the art of making expensive purchases feel affordable through creative financing. They'll show you monthly payment options instead of total cost. They'll offer to roll your existing car loan into a new loan so your payment stays the same, even though you're now financing an even more expensive vehicle. They'll push extended warranties and add-ons that provide huge profit margins while offering questionable value to you. And then there's the depreciation trap. That new car you just financed loses thousands of dollars in value the moment you drive it off the lot. Over the first few years, you're making payments on an asset that's declining in value faster than you're paying down the loan. This means you're often underwater on the loan, owing more than the car is worth, which traps you into keeping the loan until you can either pay it off or roll the negative equity into another loan. But wait, it gets even more sophisticated. The auto industry has figured out how to monetize your driving data. Modern cars are essentially computers on wheels collecting information about where you go, how you drive, when you travel, and countless other data points. This information gets packaged and sold to insurance companies, marketing firms, and other businesses who use it to extract even more value from your daily activities. Your insurance company, for instance, might offer you a discount for installing a monitoring device that tracks your driving habits. They frame this as a way to reward safe drivers, but what they're really doing is collecting data that allows them to more precisely price their risk and potentially increase profits. The discount they offer you is usually much smaller than the value they extract from the data you provide. This brings us to something even more pervasive that most people never think about. Your data itself has become a major source of wealth transfer. Every app you use, every website you visit, every online purchase you make generates data that has real economic value. But instead of getting paid for providing this valuable information, you're actually paying for the privilege of having your data collected and sold. Think about it. You pay for internet service to access websites that are free to use because they're funded by advertising revenue generated from your personal data. You pay for a smartphone and monthly service to use apps that are free because they make money selling information about your behavior to other companies. You're essentially paying to be the product in someone else's business model. Social media platforms have turned this into an art form. They've created environments that are specifically designed to capture and monetize your attention while making you feel like you're getting entertainment and social connection for free. But the cost isn't just your time and attention. These platforms influence your purchasing decisions, your political opinions, and even your self-image in ways that ultimately drive consumer behavior that benefits their advertising partners. The recommendation algorithms that seem so helpful when they suggest products you might like or content you might enjoy are actually sophisticated systems designed to increase the likelihood that you'll make purchases or engage in behaviors that generate revenue for platform owners. Every click, like, share, and purchase feeds back into these systems, making them more effective at influencing your future decisions. Now, let's talk about something that affects your wealth building in a way that most people never consider. Your time. The modern economy has created countless systems that are specifically designed to consume your time in ways that prevent you from focusing on activities that could build your wealth. This isn't accidental. Your time and attention are finite resources, and if you're spending them on activities that generate profits for others, you're not spending them on activities that generate profits for yourself. Consider how much time you spend managing all these different financial relationships, comparing credit card offers, monitoring subscription services, shopping for insurance, dealing with customer service for various purchases, researching online accounts. All of this time represents opportunity cost. Every hour you spend navigating systems designed by other people to extract value from you is an hour you're not spending learning skills, building businesses, or making investments that could improve your financial situation. The customer service industry, for example, has been deliberately designed to be as time-consuming and frustrating as possible. Companies know that if they make it difficult enough to cancel services, dispute charges, or resolve problems, most people will simply give up and accept whatever charges or terms they're given. Your time has value, and they're betting that you'll conclude it's not worth the hassle to fight for relatively small amounts of money. This creates what I call the death by 1,000 cuts phenomenon. No single financial decision seems significant enough to worry about, but the cumulative effect of all these small wealth transfers adds up to substantial amounts over time. That $20 monthly subscription might not seem worth the effort to cancel, but over 10 years, it represents $2,400 plus the opportunity cost of what that money could have earned if invested. The really insidious part is how these systems train you to think small and accept minor financial losses as normal parts of life. When you get comfortable with losing $20 here and $50 there, you're less likely to notice or resist larger wealth transfers. Your financial pain tolerance gets gradually increased until you're accepting expenses and arrangements that you would have found outrageous if they had been presented to you all at once. Here's something that might shock you. The financial education industry itself has become a wealth transfer mechanism. Books, courses, seminars, and coaching programs promise to teach you how to build wealth, but many of them are actually designed to extract money from people who are desperate to improve their financial situation. The irony is that people spend thousands of dollars learning how to make money from people who are making their money by selling courses on how to make money. This doesn't mean that all financial education is worthless, but it does mean that you need to be extremely careful about who you're learning from and what their real incentives are. Someone who makes their living selling financial advice has a built-in conflict of interest. They need you to believe that their particular approach is worth paying for, which may not align with what would actually be most beneficial for your specific situation. The real estate industry has perfected this playbook better than almost anyone else. They've convinced an entire generation that buying a house is the ultimate symbol of financial success, while simultaneously creating systems that extract maximum wealth from home buyers throughout the entire process. And I'm not just talking about the obvious stuff like real estate commissions and mortgage interest. Let's start with how the mortgage system actually works. You think you're borrowing money to buy a house, but what's really happening is that you're entering into a 30-year wealth transfer agreement that's been carefully designed to maximize the amount of money you'll pay over time. That $300,000 house doesn't actually cost you $300,000. With interest, you'll end up paying somewhere around $600,000 over the life of the loan. But here's the part that really shows how sophisticated this system is. The mortgage industry has structured loan payments so that you pay almost entirely interest for the first several years. This means that for a significant portion of your loan term, your monthly payments are going directly to the lender's profits while barely touching the principal balance. You're essentially renting money at an extremely high cost while being told you're building equity. And then there's mortgage insurance, which might be the most brilliant scam ever created. If you don't have 20% to put down, you're required to pay for insurance that protects the lender in case you default. Let me repeat that. You pay for insurance that benefits the bank, not you. If you stop making payments, the insurance company pays the bank and you still lose your house. You're literally paying to reduce someone else's risk while taking on all the risk yourself. The closing process alone represents a wealth transfer bonanza. Title insurance, origination fees, processing fees, underwriting fees, appraisal fees, inspection fees. By the time you actually get the keys to your house, you've paid thousands of dollars to various companies whose primary function is to stand between you and homeownership while extracting fees at every step of the process. But wait, there's more. The homeowners insurance industry has figured out how to turn your biggest asset into a recurring revenue stream. They've created policies that seem comprehensive but are actually filled with exclusions and loopholes that allow them to deny claims for the very disasters you thought you were protected against. Meanwhile, you're paying hundreds or thousands of dollars annually for coverage that might not actually cover you when you need it most. The bottom line is this: every single day, you're making financial decisions that feel responsible, logical, even necessary, but they're actually part of a massive wealth extraction machine that's been running so smoothly for so long that we've forgotten it's even there. Your credit cards, subscriptions, car payments, savings accounts, and mortgage aren't just expenses. They're carefully engineered systems designed to keep your money flowing upward to people who already have more than they could spend in 10 lifetimes. The good news? Now that you can see the game being played, you can finally start playing by different rules. Your wealth is out there waiting for you to claim it back.